Break-even analysis, and this is another fantastic way to understand how long it's going to take for a project to be profitable and how many units we need to sell in order to break even on a project. So the break-even analysis, the definition is just how long it's going to take to recover the cost of an initial investment. So if we spent $7,500 on a machine, well, how long is it going to take? Or how many units do we need to sell in order to recoup that cost? So that's what the break even is trying to do. Now, the formula to calculate the break even is really easy. We're just going to take the fixed costs, so that would be the soda machine cost and the installation cost, and we are dividing it by the unit gross profit. And when we do that, we are calculating how long it's going to take to break even, or how many units it's going to take to break even on this machine. So let's look at an example. Let's say a company wants to start producing solar eclipse glasses, and the machine to make them costs $10,000. And each pair will cost $1 to make, but will be sold for $5. In other words, they're going to have a gross profit of $4 because they are selling it for $5 and it costs them $1 to make it. So to figure out how many units they need to sell in order to break even on this $10,000, we're just going to take the $10,000, that's the fixed cost right here, divided by $5 minus $1, and that's giving us the gross profit. And so when we take all of that into consideration, we get 2,500 units. So if we can't sell 2,500 units, then we are going to be losing money on this endeavor. So that's the beauty of the break-even analysis. It can help us understand how many units do we need to sell in order to start making money. Okay, so now that we have the ROI, the IRR, the NPV, and the break-even analysis, let's go ahead and jump back into the spreadsheet and start putting some of these into practice.